So yeah, we are supposed to in fact continue a like have one more session on we're supposed to have one more session on key levels, right? So that where we go in depth to it. So what we're going to do is this week we're going to look we're going to dedicate a particular day to that regard, right? We're going to dedicate one particular day to be able to deal with that particular we want to dedicate like not like a full day, but a particular session to just talking about going in depth about key levels, right? So when we talk about in depth on key levels, it's not like we're trying to do something spooky, right? It's just the same thing over time, right? So today we're going to be talking about higher time frame bias and higher time frame bias and yes, how to build a time frame bias basically, right? So as you all know, like I always say, I don't draw POIs, right? So one of the things you see me never do is I don't draw POIs, meaning I don't draw a place where we expect, price to come to, before price begins to run or whatever it is. That is not what I do, right? I would rather just look for a specific area that I believe the price should actually run from, right? And that is exactly where I want to see price, run from, right? So if the key level is wrong, it's wrong, fine. If it's not going to be wrong, right? It's definitely that means it's going to hold. So we have a usual saying that if your key level is right, when price taps into your key level, if it is right, we would always see what we call a momentum push to the upside, right? Either to the up or to the downside. So momentum is definitely going to kick in. So we spoke about building higher time frame bias already, all right? That night, there was a particular night we dedicated to it. We went ahead of ourselves. We just had that session that night, right? Right. But it doesn't mean we can just still talk about a few more things, all right? So let's start like this, right? It's just going to be spontaneous, right? So if you see, one of the things you need to pay attention to, which is very, very important, right? I told us that how one of the things you want to pay attention to, which is very important, is understanding candle closures, right? So how candle closes really matters a lot, which means that if we tap into, right, we might not really talk about 2346. Somebody sending a message. Uh, okay. So if we have, for example, an A-shaped key level on the daily time frame, right? One of the ways you want to build bias is that you want to see that there are two major factors, right? That you want to consider. The two factors you want to consider is number one, you want to see how the candle is going to reject and close. So we can say reject and close, R and C, right? It's not a new term, or I'm not using a new term. I'm just trying to keep it short, right? So how the candle rejects and how the candle closes, right? That is the first factor you want to put it in consideration. And the second factor you want to put into consideration is that you want to see on if you go one time frame lower. So let's say, for example, this is a daily time frame key level, right? This is a daily key level. Price taps into this particular daily key level. And as price taps into that daily key level, we have the rejection at that particular key level. Then we see price begin to do what? Price closes below it, right? So the moment we see price react and closes below that particular A-shaped key level, the next thing we want to do is we want to move one time frame lower. So from that daily, we want to go to the 4 hours, right? And from the 4 hours, we want to see the second condition fulfilled, right? To be able to be sure that this higher time frame is going to sell to the downside, we want to see the 4 hours do two things for us, right? We want to see the 4 hours give to us either a liquidity sweep or a break of structure, right? Indicating that price wants to move to the downside. Or we want to see price on the 4 hours give to us like an engulfing, right? What we call a bearish engulfing. So you know that when the price gives to us a bearish engulfing in this type of situation, the next thing we want to see price do is that the next candle that is going to be created is going to serve as our internal range liquidity, right? So we want to see price come back to this A-shaped key level that is being created. This one is going to serve as our internal range liquidity. Then we want to see price take it. Then we want to continue to move to the downside, right? So the two major things we want to actually see happen in price is that the first place for the bias is that the moment we have an A-shaped key level, we want to see number one, price reject from there, and also how the candle closes. So you see that it takes a whole lot of patience. So, and the same way it happens on the daily is the same way it happens on the weekly, is the same way it also happens on the monthly. And also it happens the same way on the 4 hours, because if how the 4 hour candle closes, right? If you have a 4 hour, let's say you have a 4 hour key V-shaped key level, price taps into that 4-hour V-shaped key level, rejects and closes above, all you have to do is go one time frame lower, right? Which is like, would use the 1 hour preferably. And on the 1 hour time frame, you just want to see two things, right? Number one, you want to see liquidity sweep and break of structure, right? And if you don't see this liquidity sweep and break of structure, the next thing you want to see is that you want to see price give to us what we call an engulfing, a bullish engulfing to the upside, right? So there's every possibility two things can actually happen. Price might just come to this a V-shaped key level that is being created on the 1 hour, and price will continue to move to the upside, or the next 1 hour candle that is going to trade close to the V-shaped key level is going to serve as internal range liquidity. Then what price is going to do is that price is going to take it out and price will continue to move to the upside, right? So you see that we have to build a bias is very, very easy, right? It just takes a lot of patience for you to be able to wait. So if you have an A-shaped key level, for example, on the daily time frame, right? On the daily time frame, you have an A-shaped key level, right? Now, this A-shaped key level on the daily time frame, if price taps into it like this, let's say price taps into that A-shaped key level. So you know that after price taps into it, it's not just going to tap into it as a wick, it's going to tap into it as a full-fledged body, right? Now, the first condition that needs to be fulfilled is not just the tapping into that particular key level. And we want to also see how the candle closes, right? So we want to see that price must close below, that particular key level that price tested, right? So we call it the candle closure, right? So candle closure is very, very, very important, because you know why candle closure is very important? There are times that you can be having a sell, right? You can take a sell from an A-shaped key level like this, right? Let's say price will now create an open close here. So you took a sell from an A-shaped key level, you were selling. Now you were expecting that price was going to take out this particular low, or maybe you were trying to take profits at this particular, what do we call it now? This V-shaped key level. Don't forget, you were selling from this A-shaped key level only for price to sell down, and it sold to the open close, right? The moment it sold to the open close, you see that price will just start to react. Then you see that the next 4-hour candle that taps into that particular open close will close above it. Then you just see that price will just continue to reverse. Don't forget, you were even selling from an higher time frame key level only for price to tap into like a 4 hours open close. It could not get to this particular low. Then the way the 4-hour candle closes above that particular open close just signify that price was just going to reverse to the upside. So what I'm trying to say is candle closures are very, very important. Like on the daily, the 4 hours, how the 4-hour candle closes, right, is very, very important. So we have this on the daily time frame, for example. Now there are two conditions we have to see fulfilled, right? Number one, we want to see price tap into the key level, right? So this is for the daily, this is for the weekly, this is for the monthly, and also this can also happen on the 4 hours, right? We have this on the 4 hours. So the first condition is that we want to see price tap into the key level and also reject and close either above or below that particular key level, right? And the second condition we want to see is that after price has actually closed in this type of situation, which is a bearish scenario, after price has tapped into that particular A-shaped key level and closed below, the next thing we want to see is that we are going to move one time frame lower. That one time frame lower is that on the 4 hours time frame, we want to see two things happen, right? The two things we want to see happen is that we want to see price give to us a liquidity sweep and a break of structure to the downside, indicating that price really wants to go to the downside. So we are going to be looking for either a key level that is overlapping with an imbalance here. Price is going to create an internal range liquidity. Price is going to take it out and continue to move to the downside. So you will see that you don't really have to draw like a POI, right? All you just have to do is that we're just going to be looking for, having mechanized. Our system of trading is just going to be so mechanized in such a way that if A happens, so it's just like this. If A happens, so if we say if A, B, C happens, right, we will do X, Y, Z. So which means that if, let's say the first ABC that we want to see happen is that we want to see price tap into a daily key level, right? After price taps into that particular daily key level, ABC, right, we want to see price reject and also close below. So the next thing is that we have seen ABC happen, which means that price came to the daily key level, tapped into it, rejected and closed below, right? So ABC has happened. So the next thing we want to see is that our reaction is going to be the XYZ. So it's just going to be like a mechanized system. So the XYZ now says that if we go one time frame lower and we see price give to us either a liquidity sweep and a break of structure, right? We are going to be selling if we have an internal range liquidity that is close to a key level that is overlapping with an imbalance, right? We want to sell from there. right? Or we want to see something like this sweep of liquidity like this. So price is going to come back for this A leg, this internal range liquidity, play a particular key level that is close to it, and price will continue to drop. Or we are going to see the 4 hours going to do something like this. The 4 hours is going to give to us an engulfing, right? When price does give to us an engulfing after a rejection on the daily, it gives to us an engulfing on the 4 hours time frame, right? Two things can actually happen. The next 4 hour candle can actually tap into it and just drop, begin to drop. But many a times you will see that what makes it high probability, right, is that we want to always see the next 4 hour candle trade close to that key level that has been created, right? It's a trade close to it. We don't want to see it trade into it, right? Which means that this next 4 hour candle is going to serve as our what? Internal range liquidity. So we want to see price do something like this. Take this internal range liquidity, tap into the next key level, and price will continue to, move to the downside, right? So you see that okay, let me show us. There's a particular example on EU. So let me show us one particular example on EU. So if you look at EU today, everybody sold EU, right? So you can see, so if you look at the structure, right? If you look at structurally on the 4 hours time frame, right? You can see that we have swept this particular liquidity here, right? We have broken above this high. We have broken above all of these structural highs, right? And we know what a structural break means, right? So you can see how we broke above all of these highs, right? And we closed above it as a body, right? So you know what that means for us. So when you look at what price is doing on the 4 hours time frame, you will see that, we had a sweep of liquidity here. We broke above two major structural points, right? So you see lower low, lower high, lower low. We broke above two structural points. We closed above it as a body. So there are a lot of people that were actually selling from here, right? So if you look at what people were actually doing, there were people who were selling from here, which is very correct. So if you look at this, we had this internal range liquidity that is resting here, one. So we can see we had this internal range liquidity that is resting here. Then you can see above the internal range liquidity becomes high probability when we have an imbalance that is resting there. But we don't just want to trade off an imbalance. At what pricing level? So you can see this A-shaped key level that is resting here, right? The A-shaped key level that is also overlapping inside of this imbalance. So what did price do? Price did two things, right? Swept the liquidity and also rebalanced the imbalance at this specific pricing level, right? You can see this is an A-shaped key level that is overlapping inside of this imbalance. So remember, the market has just two things to do, right? Attack liquidity and also rebalance and hold imbalance. So if you look at what price did here, so if you see, all of these things even happen on the 4 hours. So if you were not so sure of what happened here, right, this is where what the people call confirmation entry means, right? So if you look at this, so look at what happened on EU, right? So you can see we took out this particular internal range liquidity. Maybe there are people who are targeting this particular low. There are people targeting all of these lows, right? I'm not so sure if it's going to get there, but if it gets there, that's fine. But you can see what EU did. It swept liquidity. Then we came to, you see this imbalance that we have here, all of this imbalance that we have here, right? We don't know, right, if price is going to do a complete rebalancing, right? Or it's going to be a 50% rebalancing. But, but the knowledge we have is that at what pricing level do we want to see price rebalance, right? So we have this particular A-shaped key level that is resting here, that is also overlapping inside of this particular imbalance. So you can see what price did. So what did price do, right? You can see we tapped into this A-shaped key level, right? Close below it a bit. Then you can see the next 4 hour candle engulfed, right? After it engulfed, what did you notice that price did? We also broke below this particular open close that is resting here, right? So, but let's not pay attention to that. So you can see how we engulfed on the 4 hours. And after we engulfed, you can see what we did from here, right? Price came back to the A-shaped key level that was created on the 4 hours. Stop loss would have just been above this particular high, right? Just to give it a little bit of room. Stop loss would have been above this high, right? And so you can see what EU did, right? So EU did something like this, right? So this is how we now have a confirmation. You can see we swept liquidity, rebalance this imbalance that is resting here. This is what we call the continuation trade. Everybody who remembers, right? So you will see the same thing that happened here, right? This place here, we didn't really have like an imbalance, a liquidity that needs to go, but you can see we had this particular open close key level that is also rebalanced, that is also overlapping inside of this imbalance. So you see what price did. You can see how we continue to drop. So this is where a confirmation entry would have come in. You can see price came back here to this particular A-shaped key level that is being created here. right? Price tapped into it. Look at another one here, engulfed again, tapped into it. So you can see the way price engulfed here and also tapped into it here, right? After price engulfed and tapped into it, right? The same thing was what happened to this place, right? So I'm just trying to show you how you can have a mechanized system, right? It doesn't have to be too rigorous like that, right? So, but you can see what price did here, right? We swept liquidity, we rebalance this imbalance at this specific pricing level. But our main attention now is that because we are, let's say you built a bias on the 4 hours, right? So you can see what price did. On the same 4 hours, we engulfed, created a new A-shaped key level that is resting here. Price came back, tapped at that A-shaped key level, and you can see where price dropped. So I now personally, because I didn't take all of these sales, so I looked at what price was actually doing here, right? So this was my major concern, right? So I wanted to see how price was going to reject from here because I was looking at it structurally that, okay, number one, we've swept liquidity, right? And after sweep of liquidity, we broke above 2 structural points, right? These are the 2 major structural points we broke above. So, and also we didn't just break, we closed above it as a body. So all of this could just be a little bit of retracement. Then we can just continue to have all of those buys. You can see we have this open close key level that is resting here. You remember what I said about key levels? Key levels can be used as entries and also can be used as exits, right? You remember what I said about that, right? So look at what this was my concern, right? This was my concern. We had this particular 4 hours key level, right? The price tapped, broke above it as a body, closed above it. So I was expecting price to come back here. But when you move to the 1 hour time frame, something unique happened. Look at what happened. So if you move to the 1 hour time frame, you see that this is the key level that we had here. You can see. So what did you notice here? Price tapped into it, respected it a bit, but broke above it with an impulsive move to the upside, right? So the moment price broke above it with an impulsive move to the upside, and you can see this same key level that was disrespected is overlapping inside of this imbalance, right? So now, because there was no internal range liquidity that is resting there, that we want to see price actually come to take, right? Attack liquidity, rebalance the imbalance at this specific pricing level because there was no internal range liquidity. So this is where we now begin to say, okay, let's see what is going to happen. For example, this is what I mean. So I said, if price rejects from here and gives to us an engulfing. So as at the time I was framing this particular setup, this buy from here, like this from here, my stop loss was just a little bit above this place. So I'm still in this trade, right? So I said, if price rejects from here, this one closes above as an engulfing, I'm going to use this particular 1 hour candle as my internal range liquidity, right? So if I use this 1 hour candle as my internal range liquidity, where am I going to be playing? We have a V-shaped key level that has already been created already, right? So you can see the V-shaped key level was already created. My stop loss was just here. So my stop loss was just here. Yeah. I just gave it a little bit of allowance. So you can see what price did, tapped into it from year to year. I think this should be over a 1 to 3. But me now personally, I still want to see EU run, right? I want to see EU run and until this particular eye is taken, right? So you can see how you can be able to. So when you talk about building bias necessarily doesn't mean that it has to be like a top-down analysis and all of those things, right? Maybe you have to do from monthly down to daily, down to from monthly, daily, 4 hours, all of those things. No, all you just have to just do many a times is just find out what a particular structure is saying. So let's say, for example, price has swept liquidity, broken structure. Let me see that message. Somebody left a message. Let's use one. So many a times, one of the ways you can build bias is that you can just look at what the current structure is, right, and where price is currently reacting at. So you can see many a times you can have, the origin of the setup. So you can see with most times we're going to have like a sweep of liquidity and a break of structure, right? The moment we have a sweep of liquidity and a break of structure, right, price can just come back to a particular key level like this. So we can have an A-shaped key level that we have on the 4 hours time frame, right? So, and the next thing we want to see price do is we want to see price react from that 4 hour key level or the daily key level, right? And the reaction is not just enough, right? The reaction is not just enough. We also want to see price close below, right? Because now we know that we have swept liquidity, we have broken structure. We want to see price also close below, right? The moment we see price close below after the reaction, right, we are just going one time frame lower, right? So let's say, for example, this is happening on the 4 hours time frame. I'm not going to the 2 hours. I will just go with either the 1 hour time frame or the 30 minutes time frame. And the only thing I'm just going to be looking for from these buyers that I'm building from the 4 hours, right, is that either on the 1 hour or on the 30 minutes, I just want to see two things. I want to see like an engulfing to the downside, create for me an A-shaped key level. I want to see the next candle that is going to trade for me, serve as internal range liquidity. Price is going to take it out and continue to drop to the downside, right? So I'm just trying to have a mechanical approach to the marketplace. So that is what it means by bias, right? Like when somebody say, what is your bias? Like, it's just like, what is your thought process to the market, right? So it doesn't have to be something very spooky, right? So you see, when I build something like this on the 30 minutes, on the 4 hours time frame, so which means that on the 4 hour time frame, price comes into a particular A-shaped key level and begins to reject, right? The moment it rejects and it closes below, my focus now will just be on the 1 hour time frame and the 30 minutes time frame, which means that on the 1 hour and 30 minutes time frame, there are two things I want to see. I want to see price either sweep liquidity and give to me an impulsive move to the downside and break structure, right? Then price creates for me an internal range liquidity, play the next key level that is being created, and we are moving to the downside, right? Or if this does not happen, many a times you will see something like this happen, which is what we call an engulfing. So you see price would engulf like this, then the next candle that is going to be traded will serve as internal range liquidity. The moment I see something like this, there's every possibility it can even hit stop loss, but it becomes an high probability trade because it's something you can also repeat over and over and over again. So what are you just going to see? You are going to see that price is going to take out the internal range liquidity and continue to drop. In fact, the sales I'm on, like the VIX 25 sales, is a very funny stuff. I wanted to catch the buy, right? Catch the buy, and I don't know if I still have the charts. Let me see. Okay, let me see. Let me just open it. Let it load. So you see that it becomes you would have like a mechanical approach to the marketplace, right? So you want to see that if a key level is being tapped into, it doesn't have to be an A shape, it doesn't have to be a V shape. Many a times it could even be an open close, right? The two things you just want to see is that number one, price taps into that particular key level, and after price taps into the particular key level, you want to see a closure, right? Which means that if price doesn't close below, let's say price closes above, there's no point you looking for sell. It means that that key level has been disrespected. So let's we've been talking about A shape and V shape. So let's say, for example, you have something like this on the daily time frame, right? Price has created for us consecutive down candles that has given to us an open close. So now we're actually looking for price to tap into this particular open close and just continue to sell to the downside, only for price to tap into that particular open close and close above it as a body, right? So the moment it closes above it as a body, it means that we have broken above this open close. It has now been disrespected. So what do we expect price to do? We are just going to be looking for buying opportunities. We'll move one time for because of how this candle closed. Is internal range liquidity absolutely necessary to validate our entry? Actually, no. Internal range liquidity is necessary because okay, let me say it's necessary when you want to define like an high probability trade, right? But there are times, the market has a mind of its own. I love to say that a lot. There are times that, for example, we want to take an entry after price has taken out, price has rejected from a key level, engulfed one time frame lower, right? So there are times that we could be waiting for the next candle to serve as internal range liquidity, right? And that might not happen. So which means that there are times that price will just tap into that key level after engulfing and continue to move to the downside, right? And there are also times that price, the next candle will serve as internal range liquidity. So the moment you see the next candle serving as internal range liquidity, it makes a lot of sense for us. We can take price to the downside, right? Or to the upside, whichever direction is actually going. But now the thing is, I won't say it's necessary, right? But to me, I want to see it as necessary, right? Okay, he said my view is it is necessary for origin but not necessary for continuation. Yeah, it could be like that as well, right? It could be necessary for origin and not necessary for continuation. So this is let me show you something. So let's say, for example, structurally, we have the origin of a particular trade starting like this. So you see something like this. We have a sweep, a break, after that sweep and break. So you see, so want to have the origin of the trade. So we know that this is an internal range liquidity, right? So you can see that it is necessary for the origin of the entire trade. So we have this internal range liquidity that is resting here, right? So let's say we have this QMR key level that is also here, that let's say the level is overlapping with an imbalance here, right? So the next thing we want to see price do is that we want to see price take out this particular internal range liquidity, right? We want to see price take out the internal range liquidity and also go for the external range. So after internal range liquidity is taken, internal range liquidity is taken, the next place we want to see price go above is going to be the external range liquidity. So we know that after this origin has started, so if you miss this origin, one of the ways we say you can get in for the continuation is that now that we have broken above this external range liquidity, right? Broke above it with an impulsive move to the upside, right? Closed above. The next thing we want to see price do is that many a times, in fact, one of the ways I even play this continuation is that whenever you have like an imbalance, like you have a key level that is overlapping with an imbalance, right? So one of the things I personally will always do is that I can just play this particular key level here, right? Especially if it doesn't have like an internal range liquidity, I can play the key level here. I'll just play 10 pip stops, max 10 to 11 pips, right? And I'll just want to buy to the upside, right? So, but many a times what I want to do is that if I'm patient enough, I can wait for price. Let's say this continuation is on the 4 hours time frame, right? I can be patient enough to wait for this. I'll wait for the 4-hour level to be tested, right? The moment the 4-hour level is being tested, I will move one time frame lower, right? Which means that I'm going to the 30 minutes time frame or the 1 hour time frame, max the 1 hour, right? So what I'm going to be looking for on that lower time frame is that I'm going to be waiting for price to give to me like an engulfing. The moment I see an engulfing after this 4-hour candle has been tested, this 4-hour key level that is overlapping with this imbalance has been tested and it has closed above. If I see this engulfing on the 1 hour or 30 minutes, right, without an internal range liquidity, I will take my entry here. In fact, it will even make me have a very tighter stop loss, right? So let's say, for example, this is where the wick for this one, that this candle that was engulfed ends. So instead of me using 10 pips or 11 pips that will go far here, I'll just, put my stop loss here, add one more pips to it. So my stop loss will be around somewhere here. So you will see that for this type of continuation, I necessarily would not even need internal range liquidity. So what I'm just going to wait for is I'll wait for the 4-hour key level that is overlapping with this imbalance to be tested. The moment it is tested, I want to see how it is going to close. If it closes above, right, I'm scaling one time frame lower to the 30 minutes or 1 hour time frame. The moment I scale one lower, I'm just looking for an engulfing. The moment I see an engulfing, I'm playing the V-shaped key level, and we're just going to continue to ride the continuation. So the same approach that I'm giving to you now is the same approach we use for the origin as well. So let's say for the origin, we have a sweep of liquidity, a break of structure. We have our internal range liquidity created. We have our external range liquidity. So now we know that we are waiting for price to come and take out this internal range liquidity, right? So let's say this is our next level that we want to see price trade into. So now this is what you can also do, right? So price taps into a 4-hour key level, right? After price taps into a 4-hour key level, let's say you didn't want to take the trade from here. You didn't want to take the trade, at the beginning from that 4-hour key level after the internal range liquidity is taken. The moment the internal range liquidity is taken and you see that price now closes above, especially above the internal range liquidity. So what price did was that price did two things, right? Price tapped into the QMR key level, took out internal range liquidity, and price closed above. The moment you see price close above like this, just go one time frame lower, right? Let me put this. So you see price tapped into this like this. So you see price now closed above. Let's say this was a 4 hours, price tapped into it and closed above. So what you're just going to do is go one time frame lower. You are going one time frame lower. You are going on the, let's say you are going to the 30 minutes or you're going to the 1 hour, right? We are going one time frame lower. So when we go one time frame lower, there's only one thing we are only looking for, right? After this rejection and the candle has closed, right? On the 30 minutes on the 1 hour time frame, we are only looking for one thing. We are looking for an engulfing to the upside. The moment we have an engulfing to the upside, you can play the next key level, this V-shaped key level that is being created, even without, without an internal range liquidity being created, right? You can play the next key level after the engulfing. You can play that V-shaped key level that is being created without an internal range liquidity and continue to ride it until this external range liquidity is taken. But there are also, unique situations, right? That even after you move one time frame lower, you will see that the next 30 minutes candle will trade very close, very close to this particular key level, right? And you are expecting that price will come and use this 30 minutes candle as your internal range liquidity and play this QMR key level, only for price to do something like this. It will engulf the 30 minutes. So you see that this is a key level that is resting here. So the 30 minutes time frame will just trade very close to this particular key level. It will not even tap into it. It will trade very close to the V-shaped key level. It will not even tap into it. And the next thing is that the next candle will just continue to fly. It will continue to fly. So you are looking at where exactly did price play from? Where price played from was this particular level here, right? This key level that is resting here. So you see that you were waiting for this V-shaped key level here, right? You want to take out this 30 minutes, internal range liquidity, play this key level, only for price to just tap from here like this, very close to it, and the next candles will just continue to move to the downside or to the upside or to the downside. So you just have to, right? When you miss the entire origin, let's say you missed it from this QMR key level, just move one time frame lower. Go to the 1 hour, 30 minutes, look for an engulfing. The moment you see an engulfing, you don't have to wait for internal range liquidity. Just play it, play the V-shaped key level and continue to move to the upside, right? Many a times, another thing you will see is that before the engulfing, you will see that price is going to create for you what we call an open close. So let's say price has taken out, now follow me, price has taken out this internal range liquidity. Price has also played out from this QMR key level. So as price was actually coming down to this QMR key level, right, we had two consecutive down candles that created for us an open close. So we know that this open close is also a key level. So now, because of how this candle rejected and closed above, we had a break, price engulfed, right? So you can see price now has engulfed this particular candle, broken above this particular key level. So the next thing is that in situations like this, where you have two consecutive candles that were engulfed, right? And two consecutive candles that created an open close, then price later got engulfed. After we have taken out the internal range liquidity and played out from this QMR key level, the next thing is it is most likely that price will not come back to this V-shaped key level. What price will do is that this is an open close that got disrespected, right? Even though we engulfed this particular candle, it is most likely that we will see price play something like this, come to this open close key level that was disrespected, and price will just continue to move to the upside. So meanwhile, you are there waiting for this V-shaped key level, but you will see that we had these open close key levels that got disrespected, right? Price came back after it was engulfed and price continued to move to the upside. So what I'm going to do is, are we together? I hope we're following, right? So let me send another link. We have a couple of seconds left. Let me send another link. Right? So I'm going to end this one so that I can start converting. So I'll send another link.